Hi folks, myself Raj. Welcome to our channel Code Shack, and this is episode 3. I'm new to video podcasting. Unknowingly, I know I will make lots of mistakes. Please forgive me, and I'll keep trying to make our videos more perfect. Today, we will discuss how institutions determine APR, annual percentage rate. For financial institutes and credit companies, they generally determine consumers' APR on the basis of various factors, like loan type, then prevailing interest rates, then loan term, then loan amount, and if there is any collateral. But most important is the credit profile, which reflects borrower credit credibility and the risk. It helps the lender to understand their profitability. So credibility is a very important factor for the lenders. Uh, like in mortgage, annual percentage rate is the total yearly cost associated with the borrowed fund from a financial institution, like more fees associated rather than interest and expenses. Like what I mean to say is in mortgage, APR is more of like a total yearly cost associated with the borrowed fund, and it's more of fees associated rather than the interest expenses. So in APR for mortgages, it's more of the fees associated rather than the interest expenses. But for revolving credit, APR determines the amount of interest due based on the carrying balance from month to month. For example, if the bill is paid in full within within time, like within the stipulated time period, and there is no interest incurred in that time period, so there would be no payment pending. So it's more of like whatever the amount due, that's what the interest would be charged on. So if a bill is paid in full within the stipulated time, there would be no interest charge and there would be no payment in pending. Yeah, what is annual percentage rate? Annual percentage rate is a standardized way of expressing the true cost of borrowing over a year. So it is a standardized way the lenders calculate the true cost of the borrowing over a year, including both nominal interest and any fees associated or costs. So also it includes any other fees or cost associated with the loan. So it includes the nominal interest as well as the fees or any other cost associated with the loan. The specific method of calculating annual percentage rate can vary depending on the type of the loan or the credit product. So the APR calculation varies with the product. Different loans, different credit products have different way of calculating APR, as well as the regulation in the jurisdiction where the institution operates. Also, it depends on the region or the area or the country. Based on their jurisdiction, the institution generally follows or calculates the APR as per the rules and regulation. I will share the formula of APR in the description box. You can check it out. However, there are some principles and factors that commonly contribute to the determination of APR. I will share one by one those general principles that are associated in determining the annual percentage rate, like the nominal interest rate. The nominal interest rate is the percentage of the loan amount charged by the lender for borrowing. It is a key component of APR calculation. So nominal interest rate is the percentage rate that the lender charges you for borrowing the money from them, and it is one of the important component for APR calculation. Then the fees and charges. APR also includes any other loan charges or any other fees associated with the borrowing fund. So APR includes any additional fees or charges associated with the loan, such as originating fees, processing fees, and other upfront costs associated with the loan. These fees are added to the total cost of the loan when calculating the APR. Then also the loan term. The length of the loan term can affect the APR. Generally, loans with longer terms have higher APR because the total interest paid over the life of the loan is greater. So if the term of the loan is longer, then the APR tends to be higher. Then the compounding frequency. For loans that involve compounding interest, the frequency at which the interest is compounded can impact the APR. Loans with more frequent compounding may have higher APRs, like personal loans, then credit cards. Mostly they are compounded, so they have higher frequent compounding. So they have higher APRs. So revolving credits mostly have more frequent compounding, uh, or they are more frequently compounded, so they tend to be have higher APRs. Then payment or prepayment penalties, like like if there are penalties for paying off the loan early, this can affect or this can be factored into APR calculation. So like also if you have NSA fees or any mispayment, or you didn't able to make a payment, you pushed or skipped a payment, those are also factors in calculating APR. Like if you skip a loan payment and you didn't clear that payment, that can also affect your that can also be added to the APR. Just such penalties increase the overall cost of your loan. So keep in mind, if you miss a payment or if you skip a payment, try to clear out the payment as early as possible. Otherwise, that can make your loan costly. As the APR comes into play, and you know that it's a compounding factor comes into play also. So that will make your loan way costlier. Then variable interest rate. The variable interest rate is for loans with higher interest. The APR calculation may involve making assumptions about the future interest rate. Changes based on certain benchmark. Like if you are in a variable interest rate, then there are other things comes into play, like variable interest rate uh, follows the benchmark. If there is any benchmark changes, then the interest rate also fluctuates. So as a result of that, the APR calculation may involve changes as they are making an assumption for the future, because we don't know whether the interest rate would be, if you're in a variable rate, we can't say whether the interest rate would be sticking to that level, or it may go higher or it may come lower. So so in calculating the APR, it's more of like assumption for the future interest rate. Then discount point. In mortgage loans, borrower may have the option to pay points upfront to lower the interest rate. The cost of these points is factored into the APR. Like in mortgage, you have the option to pay upfront the principal. As you pay the principal, the rates or the cost of your loan comes down. So this is also a factor that come into APR. So keep in mind that if you're paying if you're paying the for a mortgage and you are planning to make a payment, try to make the payment for your principal, and when you are paying it, talk with your lender so that that money goes towards the principal. They doesn't adjoin it with interest. So keep in mind, whenever you're paying a certain amount to the lender towards your mortgage, make sure that amount goes towards the principal. That will make your mortgage cheaper in the long run. So APR generally designed to provide borrowers an accurate measure of the true cost of borrowing, allowing them to compare different loan offers easily. So like APR is designed in the benefit of for the benefit of the borrower. They can take the APR and they can compare different loans, and whichever APR whichever APR is costing your loan cheaper, you may select that loan. So if you're comparing loans, then always consider APR rather than just the nominal interest rate, because if you take the nominal interest rate, there might be other charges or other fees associated with your loan, and that may affect the costing of your loan. So whenever you are comparing loan, make sure that you're considering the annual percentage rate, that is APR, not the nominal interest rate, as it provides the view of the overall cost of the loan. Sorry. So make sure that whenever you are comparing loan, consider the APR, not the nominal interest rate, because APR considers the nominal interest rate as well as other fees associated with the cost of the loan. So if you take the APR, you will get the entire cost of the loan, and if you take the nominal cost, you will not be able to find the actual cost of the loan. So whenever you're talking with a lender, discussing with the lender about the loan, then ask what is the APR so that you can get the calculation uh, of your loan cost absolutely right. And hopefully this video helps you all in understanding the APR. And that's everything for today. I will again come back next week with a new episode, new topic. Take care and have a very good uh, week ahead. Thank you again.